Let's talk about that brown envelope from HMRC. You know the one. Just the sight of it is enough to make your heart skip a beat, isn't it? Well, today, we're going to face that fear head-on. We're going to figure out what the real chances are of being investigated, and we're going to demystify the whole process so you know exactly where you stand.
This whole discussion has actually been arranged for you by my tax accountant. They know this is a huge source of worry for so many business owners, and they wanted to bring some much-needed clarity to the topic. Our goal today is simple. Replace that fear with facts so you can handle your taxes with confidence. So let's get into it.
Ah, yes, the infamous brown envelope. For millions of people across the UK, it's a moment of pure dread. Your heart starts pounding, your mind races, what have I done wrong? It's a scenario that causes so much anxiety. But you know what? Understanding what's really going on is the very first step to taking back control.
So here's our plan for today. First, we're going to look at the actual odds. Then we'll dive into the red flags that HMRC is looking for. We'll cover what an inquiry really involves and, yeah, the potential penalties. But most importantly, we'll finish up with how you can protect yourself and when it's probably time to call in an expert.
Right, let's get straight to it. Section 1 is all about your real investigation odds. You see, the best way to deal with any fear is to look at the reality behind it. So let's look at the numbers and really put this whole thing into perspective.
Okay, so just look at the sheer scale of this. Every single year, HMRC receives around 12 million self-assessment tax returns. 12 million. Out of that huge number, they conduct about 300,000 investigations, or what they call compliance checks. I know, 300,000 sounds like a big number, but when you see it visually like this, you realize it's actually a pretty small fraction of the total. To put it another way, your chances of being investigated are roughly 1 in 40. Now that's not nothing, but it's definitely not the terrifying lottery it can sometimes feel like. The main thing to take away here is that most taxpayers will never face an investigation. But that leads to a really important question. Who does get chosen?
And well, this chart really says it all, doesn't it? A massive 93% of investigations are triggered by specific red flags in a tax return. Only about 7% are genuinely random. And that's the crucial point. HMRC isn't just picking names out of a hat. They're following a trail. So let's find out what those trails or red flags actually are.
And that brings us to the heart of our discussion. What exactly is it that catches HMRC's eye? Because understanding these triggers is, without a doubt, the single best way to lower your risk. Stay with me. The next point might surprise you, especially how they get their hands on this information.
So what are they looking for? Well, first up, big, unexplained jumps or drops in your income. If your profits suddenly double or get sliced in half, that's a flag. Second, a pattern of making the same mistakes over and over. That looks suspicious. Third, certain cash-heavy industries, like construction or hospitality, they're just seen as higher risk. They'll also look for a lifestyle mismatch, declaring a pretty modest income while you're living a life of luxury. And finally, conflicting info from third parties, like your bank. But that's not all. Here's where most people go wrong. They totally underestimate how HMRC connects all these dots.
Let me introduce you to Connect. Now, this isn't a team of inspectors sifting through paperwork by hand. Oh no. Connect is a hugely powerful supercomputer. It crunches billions of data points from banks, credit card companies, the land registry, and yes, even your public social media profiles. It builds this incredibly detailed financial picture of every single taxpayer to automatically flag issues a human might totally miss. Let's make this real for a second. Over on the left, you've got Sarah, a freelance designer in London. She declares a massive drop in her income one year, but her Instagram is full of pictures from a 5-star holiday to the Maldives. Bam! The Connect system flags that mismatch instantly. And on the right, there's Tom, who owns a cafe. His declared profits suddenly plummet, but his business bank account is still showing large, regular cash deposits. Connect sees the cash going in, doesn't match the profits coming out, and it triggers an alert. These aren't wild guesses. This is how the system works every single day.
So, what happens if you do get flagged? That brings us to Section 3, what an inquiry actually looks like. It's not always some full-blown, turn-your-life-upside-down audit. There are actually different levels of scrutiny.
The most common type is an aspect inquiry. This is where HMRC just wants to ask about one specific part of your return. Say, for example, a really big expense claim that just looks a bit unusual. Now, a full inquiry, that's more serious. That's when they want to look at your entire tax return and all your business records. And then, of course, you've got those random checks we mentioned earlier, which are just routine checks to make sure the system is working as it should.
And then there's the most serious end of the scale. A Code of Practice 9, or COP9 investigation. This is only for cases where HMRC suspects serious, deliberate tax fraud. It's rare, for sure, but it's important you know it exists. If you ever get a COP9 letter, you need to get specialist advice, and fast.
Now let's look at the next step. If an inquiry does find errors, what are the consequences? This is where your behavior, how you handle the investigation, becomes absolutely critical. The penalties are definitely not one-size-fits-all. This table lays it all out pretty clearly. If the error is seen as careless, an honest mistake, the penalty can be anywhere from 0 up to 30% of the unpaid tax. If the error was deliberate, the penalty jumps to between 20 and 70%. And if you deliberately made the error and then tried to hide it, well, you could be looking at a penalty of up to 100% of the tax you owe. The takeaway here is that honesty and cooperation can literally save you thousands of pounds.
And don't forget the interest. On top of any unpaid tax and penalties, HMRC charges interest. The rate changes, but right now it's 7.75%. And crucially, this is charged daily. So the longer an issue goes on, the more expensive it gets. That's why it's so important to tackle any inquiries head-on and to do it quickly.
Okay, enough about the problems. Let's talk solutions. This next section is all about shifting your mindset from being reactive to being proactive. What simple, practical steps can you take right now to minimize your risk of an investigation in the first place?
Here it is, your protection checklist. First, keep amazing records. Honestly, this is your best defense. Use a separate bank account for your business. Mixing personal and business money is a classic red flag. Always, and I mean always, file and pay on time. Declare every single penny of income. Be honest with your expenses. Don't try to claim for things you know you shouldn't. And finally, if you realize you've made a mistake, tell HMRC yourself. A voluntary disclosure is always treated much more leniently.
And here's a quick pro tip for you. Using digital accounting software is an absolute game changer. Not only does it keep you organized and create a clear digital trail, but it also makes sure you're ready for HMRC's Making Tax Digital rules, which are rolling out to more and more taxpayers. It's all about working smarter, not harder.
Finally, let's talk about getting help. Because while all the steps we've just talked about are so important for protecting yourself, there are definitely times when you just need a professional, especially when navigating the tax system during an investigation.
I think this quote just sums it up perfectly. An investigation is incredibly stressful. A good accountant doesn't just crunch the numbers. They act as a professional buffer between you and HMRC. They speak the inspector's language, they handle all the back and forth, and they really shoulder that burden, which lets you focus on what you do best, running your business and your life.
So, if you're facing an investigation right now, or if you just want that peace of mind that comes from knowing your taxes are in perfect order, the team at My Tax Accountant is there to help. You can call them on 0208-570-8531. Again, that's 0208-570-8531. Or you can email them at info@mytaxaccountant.co.uk. You really don't have to face this stuff alone.
And for more straightforward, helpful insights, just like we've covered today, I'd really recommend subscribing to the My Tax Accountant channel on YouTube. It's a fantastic resource for staying informed and feeling empowered.
So, we'll leave you with this one last thought. Try to think of your tax return as the financial story of your year. The ultimate question you need to ask yourself is this: is the story I'm telling HMRC a complete and accurate one? If the answer is yes, then you can have confidence and real peace of mind. Thanks so much for joining us.